U.S. stocks move lower as Wall Street digests earnings. Healthcare leads. U.S. stocks moved lower Thursday as Wall Street kept an eye on mixed earnings and upbeat economic data following the week of record highs for the Dow and S&P. The Dow Jones Industrial Average fell slightly as American Express weighed and Caterpillar had the most positive impact. The S&P 500 was also down fractionally, with healthcare the only sector in the green. The Nasdaq Composite fell roughly 2 points. The number of Americans filing for unemployment benefits fell to a 3-month low last week, in a sign that the labor market is stabilizing. This is the first indication that job growth in July was also pretty good, said David Carey, chief global strategist at J.P. Morgan Asset Management. The economic narrative remains the same. The economy isn't growing fast, but it's growing fast enough to cause the labor market to tighten. Initial claims for state unemployment benefits fell by 1,000 to a seasonally adjusted 253,000, the Labor Department said Thursday. Economists polled by Reuters expected claims to rise to 265,000. Claims are near a 43-year low, hit in mid-April, Reuters reported. The better jobs number was a fundamental catalyst when you look at what happened in the market after, said Liz Ann Saunders, chief investment strategist and senior vice president at Charles Schwab. Saunders highlighted the June non-farm payroll number, which exceeded expectations with a headline figure of 287,000. This market rally had more to do with economic sentiment than anything, she said. The Dow Jones Industrial Average closed higher Wednesday with 9 consecutive days of gains for the first time since 2013. The S&P 500 closed at a new record level and the Nasdaq Composite had its highest close of the year. Quarterly results came in mixed Thursday. General Motors posted a record second quarter profit Thursday, sending shares up more than 3%. The stock is pacing for its 12th consecutive positive day for the first time ever. Biogen helped boost the Nasdaq and S&P, with the stock up more than 6% after posting positive results. Intel shares fell more than 3.5% after it beat analysts' expectations for earnings on Wednesday, but posted revenues came in lower than expected. Fellow chipmaker Qualcomm beat Wall Street expectations and issued strong forward guidance, sending shares up nearly 7%. Bank results continued to surprise this week, with Morgan Stanley reporting earnings of 75 cents per share versus consensus expectations of 59 cents, according to Thomson Reuters. Morgan Stanley joined Goldman Sachs, Citigroup, J.P. Morgan Chase, and Bank of America on a list of U.S. financial institutions topping second quarter profit forecasts. These numbers are confirming the earning bounce back we were expecting, given flat oil prices and a flat U.S. dollar, J.P. Morgan's Carey said. What we're getting is confirmation that the economy is still growing steadily and earnings are rebounding. Of the 70 S&P 500 companies reporting as of Wednesday, 67% beat estimates according to Thomson Reuters. Starbucks, AT&T, Capital One, Visa, Schlumberger, Boston Beer and Chipotle report after the bell. European stocks moved lower after the European Central Bank left key interest rates unchanged Thursday. The non-move was widely expected, but further policy stimulus from global central banks is thought to be coming in the months following June's Brexit vote. ECB President Mario Draghi said at a press conference that the central bank was ready to act if necessary, but officials wanted to reassess the underlying macroeconomic conditions and data before making the decision. The Pan-European STOXX 600 was up slightly after falling in early trade. European travel stocks went lower, led by Lufthansa, which cut its full-year profit target as bookings declined due to terrorist attacks and economic uncertainty, the company said. Shares of the airline fell 8% after the news. The German DAX traded roughly 25 points higher, the UK's FTSE 100 rose 0.5%, and France's CAC was up 0.03%. Then yen hit new lows after news that Tokyo was considering a 20 trillion yen package of stimulus to bolster the economy. The currency later recovered 1% as Bank of Japan Governor Haruhiko Kuroda told the BBC Radio that there is no need for helicopter money to fight inflation, and the central bank already had mechanisms in place to ease further if needed. Although the interview was published Thursday, the BBC said it was recorded in June. The yen gained 1% against the dollar after Kuroda's comments, trading near 106.25 yen. The dollar was weaker against a basket of currencies after hitting 4-month highs Wednesday. The euro hit a high of $1.1058 against the dollar before losing most of the gains in choppy trade. The euro traded near $1.10, while the British pound fell to $1.32. The market can handle a little strength in the dollar, but not if it starts to impact other areas that cause financial conditions to tighten, said Saunders of Charles Schwab. We've been in this policy loop. At the heart of it is what the dollar is doing. Oil was slightly lower, with WTI trading near $45 after hitting a 2-month intraday low a day earlier. Brent crude futures were just below $47.